Join us right now to talk about Citi and the other big bank results from this morning, Bank of America and Goldman Sachs. Devin Ryan is here, Citizens JMP senior research analyst. You look at these three, you can't, I will tell me what your biggest headline is and which one you actually like and what don't you like.
Yeah. So I think the biggest headline is results are getting better. So people are beating on capital markets, trading, investment banking, and we think we're on the front end of that recovery. So 2025 is going to be a lot better than 2024. So that gets to the kind of the other question: what do we like? So we still like firms that are levered to capital markets. Goldman Sachs would be kind of the top one there. And then another firm that we didn't hit yet is Schwab, that also just reported. That's another one. They're having a big pre-market move here, and that's one that a bank that we think has a pretty significant upside.
Bank of America?
Yeah, I think the results are good. So more in line. And I think the net interest income story is going to be complicated. Rates coming down isn't typically viewed as a good thing or a great thing for banks. I actually think that as we get into 2025, what you're going to start to see is rates coming down. You're seeing deposit costs come down a lot. So banks are managing deposits. There's been a lot of cash sorting, so money going to money market funds. We're starting to see that slow down. And I think deposits are going to start to grow again. And then next year, I think there's going to be a lot of loan growth. So we haven't seen a lot of loan growth this year. Next year on the other side of the election, and then with rates coming down, that's going to be bullish for loan growth as well. So I think the traditional banks are going to have a better 2025 as well.
Okay, so what do you think of Citi? And I mean, Citi's been a challenged bank for a while now.
Yeah, I mean, there's a lot of complexity and a lot going on. I do think that they are getting the house in order on expenses, and I think the restructuring that they're doing, it's early days, but I think they're doing a nice job. Like I said, the big stories here are what are firms going to be able to do on the capital market side. They've got a pretty big capital markets business. So all the big banks, including Citigroup, are well positioned, in my opinion.
Who wouldn't you touch right now?
Yeah, so I think the places that we see the most risk are in the kind of lower end of the consumer. So you saw with Citi a little bit of the FICO, and we're seeing that play out, I think, across consumer finance. So I think you need to watch out there. And then commercial real estate's still going to be a headwind. I think most banks have taken pretty big provisions for that, but I think on the regional bank side,
are we out of the woods on commercial real estate?
We're not out of the woods, in terms of there's going to be more losses. I think that most banks have gotten pretty far ahead of the problem. So I don't think there's going to be a big shoe dropping, but I think that you're going to just see a lot more small nicks from that over the next year here. So I would look at big diversified firms with capital markets trading, and then firms that can manage through lower interest rates, which means firms that can grow deposits. And then, like I said, on the loan side, we actually think 2025 will be a better loan growth year.